Hi everyone. We've discussed the concepts of Ind AS 38, which is intangible assets. We would now like to apply that knowledge with the help of several questions and scenarios. We are given the scenario. It says that A Limited has acquired 70% stake in B Limited, that's another competitor, and obtains a control over the company. A Limited paid 1 crore as purchase consideration. The fair value of the net assets acquired is 85 lakhs. The purchase consideration includes 3 lakh for obtaining the skill set, 3 lakhs for obtaining the skilled staff of B Limited, and 5 lakh rupees as a non-compete fee for B Limited to not compete for next 3 years. The question's requirement is how should the above transaction be recognized by A Limited? Well, friends, you would need to recollect the recognition principle of an intangible asset, right? The recognition principle or the criteria suggests that the intangible asset, for something to qualify as an intangible asset, it has to be separable. And then we are talking about, of course, control and future benefits around it. Okay. Now, when you look at the first item, which says that 3 lakh rupees for obtaining the skilled staff of B Limited, essentially it lacks control for the simple reason that you cannot control employees of an entity. Okay, there's no contractual right that is available to you that helps you or that allows you to control the staff, and accordingly this amount cannot be recognized, cannot be recognized as separate intangible asset, right? Which means what? This 3 lakh becomes a part of the premium paid, which is referred to as goodwill. It is subsumed within the value of the goodwill itself. All right. Now, if you look at the other part, which is 5 lakh rupees as a non-compete fee paid to the B Limited, it is a contractual right. There is a contractual right, which is a separate arrangement or agreement. So in a way, you can separately quantify that, and you have a control as well as there are future benefits available because of the non-compete clause, right? So in this case, the contractual right is required to be shown as a separate intangible asset. All right, let's have a look at the formal solution around it. It says that 3 lakh rupees paid towards obtaining the skill staff does not meet the recognition criteria because you do not have a sufficient control over that. And accordingly, it becomes a part of the goodwill since it is acquired under a business exchange. With respect to the non-compete fee, A Limited should recognize a separate intangible asset. All right. Let's look at this scenario. It says that Omega Limited purchased a franchise from a retail shop. The amount paid is 10 crore rupees. The franchise is valid for 10 years from the date of purchase. Additionally, the agreement provides that Omega Limited would pay a royalty of 5% on the total sales made. The question is, how should Omega Limited account for the franchise rights? Again, we bring the concept of the recognition criteria, right? We say that an intangible asset is recognized when it is separable or identifiable, right? So the identifiability criteria has to be available, has to be present for something to be called as an intangible asset. Over and above, we talk about the word control, and we talk about, of course, the future benefits as well. Now, in this given case, the very right, the very franchise for which Omega Limited is paying 10 crore rupees, that is meeting all these criteria of identifiability or separability, the control, and also the future benefits, which means that that franchise, the franchise rights would clearly meet the definition of intangible asset, right? This is to be amortized over the 10 years tenure. All right. Now, the second part where Omega is required to pay a royalty. Now, royalty essentially is an operational expense and will be charged as expense to the statement of profit or loss. Looks okay, right? Let's have a look at the formal solution. It says that since the franchise arises from a contractual right, Omega Limited should recognize the franchise as an intangible asset. It is separately acquired and there is a control over the same. Further, the cost can be reliably measured and of course, the future benefits are expected. So that entire recognition criteria is being met as far as the franchise rights are concerned. Okay. Now, it should be amortized over a 10 years life. However, the royalty should be charged as an expense over the period as an operational cost. Okay. Let's have a look at this scenario. It says that Beta Limited incurred 50 lakh rupees for promotion of an event by conducting activities including advertisements, roadshows, etc. Post the event, Beta realized that the brand value of the company has become popular and more acceptable. And as a result of that, sales have increased. The company assesses that the trend is expected to last for next 3 years. The question says, how should Beta Limited account for the costs incurred for promotion? Now, again, bring yourself on the thought of the recognition criteria. What is the recognition criteria? We say that it should be separable or identifiable. You talk about the word control and of course the future benefits. Okay, so these three criteria are expected to be met when you refer something to as an intangible asset. All right, now any promotional event, we may argue, yes, it is separable and identifiable. There is a control that the entity has got, and very clearly there are future benefits expected as also evident in this given scenario. So should we go ahead and let's say, should we go ahead and call the promotion charges or the promotion event, or should we go ahead and call these promotional expenses an intangible asset? Well, there is also a section that we have talked about where we say costs to be expensed. All right, there's a list of costs. There's a list of costs which are categorically identified in the standard to be charged to the income statement, to be charged to the statement of profit and loss as and when they are incurred, and they categorically include any advertisement or promotional expenses. All right. So no matter the criteria of something which is to be called as an intangible asset, categorically advertisement and promotional expenses are always charged to the statement of profit or loss. Right? Let's have a look at the formal solution. It says that the amount paid by Beta Limited results into an increase of future economic benefits, but it does not result into creation of an intangible asset since any advertisement or promotional activities are specifically excluded from the definition of an intangible asset. Accordingly, the entire amount of 50 lakh rupees should be charged as an expense to the statement of profit or loss. All right. Thank you very much.